All right, our next speaker is Duncan Gibbs from Gold Road Resources. Duncan has been Managing Director and Chief Executive Officer of Gold Road Resources, a $1.4 billion Perth-based mid-tier gold company and exploration company, gold and exploration company, since September 2018. Since joining Gold Road, Duncan has overseen the safe and successful start-up in 2019 of the world-class 300,000 ounce a year Gruyere Gold Project in WA's northeastern goldfields. The project's a 50-50 joint venture with Goldfields, has a 12-year mine life based on a 6 million ounce discovery made by Gold Road in 2013. Duncan, will join us.
Right, thank you for that introduction, and thank you for Diggers and Dealers for the opportunity to speak with you today. Firstly, I'll just start off with a little bit of a company overview for those who are less familiar with the Gold Road story. Gold Road, of course, consolidated the Yandina belt back in the early 2000s, and that resulted in the Gruyere discovery back in 2013. We've successfully taken then the project through the pre-feasibility, feasibility study stage, and then looked at the alternative paths of financing the project through the traditional debt equity route, but also considered a joint venture strategy. The joint venture was ultimately formed with Goldfields, who are now the manager and operator of the project, and it's a very successful partnership that has really brought the project into production very successfully, probably one of the better ramp-ups of any project in recent times in Australia or indeed in other parts of the world. In addition to our interest in Gruyere, we have a very substantial land package covering about 4,500 square kilometres in the Yandina belt, and really our focus within that belt is to find other discoveries that can lead to the development of a second mine. We think Gruyere has got an open pit mine life of at least a decade, and it makes sense if we make further significant discoveries that we look at increasing the scale of the business through that strategy. We also hold a substantial land package down in the wheat belt in what we call our Yandina Project. That's a joint venture with Cygnus, and we're currently taking over management of that property. Let you read our kind of corporate profile here. You can read through the details. As per the introductory comments, we're around about a market cap of about $1.4 billion Australian. We're well supported by analyst research. Probably a couple of things just to point out on our share register. Strong North American institutional support, probably beyond what most Australian companies of our kind of scale have. And we believe that reflects the high quality, long life, low jurisdictional risk nature of the Gruyere project. And many of those investors are in fact investors who are invested typically in larger organisations than the scale offered by Gold Road. Clearly the last year has been a year of transformation for Gold Road. It's just over a year ago we poured our first gold at the end of the June quarter of 2019. We successfully delivered the project just under the forecast capital cost. The first year's production, 230,000 ounces, was in line with guidance. Gold recovery on the project has been slightly better than we've seen, and we've seen good throughput rates for the plant, and we think the plant offers potential over time to deliver better than the bankable feasibility study. Little picture there of the official opening ceremony with our chairman, Tim Netcher, and of course the Minister for Mines, Bill Johnson. Of course that leads many investors to ask the question of what's next for Gold Road. Really for Gruyere, which is the central platform, of course, of our cash flow, we really see the opportunities to make Gruyere stronger for longer. And I'll come back to that story a bit later in my presentation. As I already said in my introduction, we're strong focus on exploration, particularly in the Yandina belt, and we're investing around about $25 million a year with the objective of finding and developing another mine. We've also started turning our attention to looking at corporate development activities. We formed a team around about a year ago to start looking at those opportunities. And obviously in this market, finding the right combination of a high quality asset that dovetails to the quality of Gruyere at a value accretive price for shareholders is not a simple thing to do. However, we see that we've got Gruyere as a long-term asset. It's not something that we need to rush into, but it is something that we're actively looking at. To be successful as a business, I see a business really starts with the people of the organisation, and we have to build the organisational capability to realise those growth aspirations. We also need the balance sheet strength to be able to deliver on those growth opportunities of the business. We've also put a strong focus on developing our ESG capabilities within Gold Road, and we're working towards our inaugural sustainability report for the next financial year for us, which will be completed at the end of the calendar year. If I just start with ESG, as I've indicated, we're working towards our first report, and I think that'll be quite a key milestone for the company to put out what is, I think, a good news story in terms of our underlying performance. Certainly working with Goldfields at Gruyere, the operation is being developed to a high standard. It's compliant with the Cyanide Management Code. We're expecting to have ISO 14001 and 45001 environmental and safety certifications through the course of this year. The tailings dam is a low-risk downstream facility, of course, early in your mine life. We have a low emissions power plant. We're looking at augmenting that with a solar PV farm, importing some of Ken's lithium back into Australia with a battery energy solution. Of course, we developed Gruyere through a native title agreement. That means the consultation around culture, heritage and benefits through the community, including through employment and contracting opportunities, were all addressed through that agreement. That's an important issue with the current discussions, of course, around heritage concerns in Western Australia. Exploration, we're also working quite strongly on our ESG credentials in that space. We're coming towards the end of construction and about to commission a small-scale solar plant that will run our exploration facilities. That's been constructed in a mobile format, so we can pick it up and move it into the future if we choose to. We're working on building a strong safety and environmental focus and culture within our own business. If I can come into the Gruyere mine. So unfortunately no site visits this year, so a little bit of a fly through to give you a sense of the operation as it currently is. So this is flying over the stage 1 pit, and you can see some NT 4400 trucks coming into the loader for the loading cycle here. So the main pit floor area in the foreground there has been the main source of ore. Cutback area on the back of the screen here, looking over towards the plant site. Coming into the plant site here, you can see the SAG mill, bottom of screen, and the ball mill rotating around there. Again, more picture of the SAG and ball mill. Gravity circuit in the centre of screen here. Just to zoom up over our leach feed thickener and the CIL tanks. The tailings thickener. Down the CIL train and towards the gold elution circuit and cyanide area powerhouse here, and looking over some of the site infrastructure. So the plant, been running well. We had a small issue after our last maintenance shutdown that we put out an announcement around the ball mill. We had a failure on a mill bearing that was really related to an issue during the shutdown. That ball mill's now up and running as we'd expect to be normally with no other issues. Okay, so if we look over the last couple of quarters of production, and obviously our quarterly results for September quarter yet to be released. They'll be out in the market in the next couple of weeks. But if you look at the performance through the first half of this year, it's been a successful journey. The grade lines up very well between the mine and the plant, lines up very well with the resource. So important thing is the quality of the resource is as we expect it to be. It's a simple ore body, robust, low risk. Mining, we've ramped up a second mining fleet. That's now fully on site and operational. Through the June quarter, we're partly way through ramping up that. That's led to probably the main increase in our capitalised costs there, and otherwise the operation is performing to normally, and that ramp up, of course, going to expectation. For the 6 months, we produced an EBITDA of 61 million, an NPAT of 23 million. Of course, we had some unsold bullion at the last quarter of about 5,330 ounces, and at today's metal price is around about $15 million, which you can add in effectively to the cash flow over the first half. We've got a strong balance sheet, and we became debt-free in about mid-July, and we've got a substantial debt facility of $250 million, which enables us to be able to develop operations or, if the right opportunities become available in the M&A space, that we have that capacity available to the company. We also have one of the lowest corporate all-in sustaining costs. So this is looking at the costs at the operational level, plus our exploration expenses, plus our corporate costs, and we'd be one of the lowest 2 or 3 in the industry. There's increasing levels of imagination as to what goes into growth capital, but if you look at the metric at this level, there's nowhere to hide. If we look at our 2020 guidance on production, 250,000 ounces to 270,000 ounces. We recently narrowed up that range. Unfortunately, we had an increase in all-in sustaining cost relating to reduced production levels in the third quarter, and the details of that will come out in this quarterly report. That in part relates to the transition to fresh rock mining through the September quarter and the configuration of the ball mill and SAG mill and crushing circuit, as well as the downtime that we experienced in the latter part of the quarter. So we understand that the September quarter was always going to be our more challenging one, and the December quarter should be pretty promising based on our understanding of where that's travelling. If we look at Gruyere in the longer term, really we see the opportunity of the operation through increasing the plant throughput. Partly that's around increasing operating time, but we've certainly experienced through the start-up phase of the plant that it's capable of operating well above the nameplate throughput capacity. Obviously, we need to stabilise and understand what it's really capable of on fresh rock, but all the early indications are quite favourable. We see that can then contribute to reduced unit operating costs in the plant, and if we're mining at a higher rate, we get some benefits for G&A and all the operating costs of the site. We believe if we put those elements together, along with some steepening of the pit walls, we can drive the pit to a deeper level than what came out of the bankable feasibility study. Conceptually, we think we could get the pit down to somewhere like 400, 450 metres below surface. That becomes one of the deepest pits in Western Australia. Of course, to get that right, we need to understand the geotechnical parameters well. We've done some geotechnical and metallurgical drilling under the pit, so we have that information. We really want to get an understanding of the fresh rock exposure in the mine before we start to lock in the commitment and the understanding of what the life of mine reserve looks like for Gruyere. I guess we understood that strategy, and that really led us to drilling off the resources below the pit through 2019, and that led to 1.2 million ounce increase in the indicated category resource. So we upgraded about 1.2 million ounces from inferred into indicated, and really the game plan that we have is about getting those additional ounces into reserves through the strategy that I've outlined. Importantly, what we're trying to do is to grow the pit, not just by optimising at a higher gold price, which of course delivers in higher cost per ounce. It's really about trying to get the pit optimised at a similar gold price structure so we maintain margins over the long term. Of course, Gruyere, the resource is open at depth, and there is the opportunity at high gold prices to potentially mine a much larger pit or consider other mining strategies below the base of the pit. We turn to our exploration activities. As I've indicated, what we're really trying to do is to find another mine within the Yamana belt. We're targeting 100,000, 150,000 ounce type scale that can lead us towards being a 300,000 ounce producer in our attributable share. We see that needs to be underpinned by resource reserve base in excess of 1 million ounces. We're clearly not there yet. We've had some early wins with things like Gilmore, but we need to put a few of those together before we're at the point that we can develop another operation and really can move the dial for the company. What we do have is really a frontier exploration belt that has a lack of exploration, the wave of exploration that's occurred through most of the goldfields. That's really a result of the remote location of the Yandina belt and the blanket of sand cover that inhibited the early stage prospecting and soil geochemical programs that occurred through most of the goldfields and led to the discovery of most of the deposits that are currently being mined today. If we zoom into what we call our southern project area, so this is focused in the southern part of the belt, really we see this is the most geologically prospective area, and the reason I say that, we've got the right ingredients, large-scale crustal faults, good geology, right host rocks, complex folding and faulting, and some late-stage intrusives. All the things that geologists really look for in greenfield exploration to try and lead themselves into discoveries in these type of systems. We're doing large-scale air core drill programs really to work through the first pass exploration. We're starting to generate some quite large geographical anomalies. The advantage of a large area anomaly is there's enough space to pick a decent-sized deposit in. We're still in early stage work. The next critical bit is really about RC, diamond drill testing, a number of these key targets. And to date, those targets include Kingston, Horono, Savoie, Beefwood, and we see there's some further opportunities to extend the Gilmore resource that we discovered and developed, in 2019. Zooming in into a bit more detail in the Kingston Smokebush area, these illustrates a number of the geochemical anomalies that we've got, and we've got early first pass diamond holes with some positive intersections. If we look at the Savoie area, we're talking about anomalies, multiple kilometres long, large regolith systems. There's a lot of gold floating around in this part of the environment. We just need to focus on getting into where did it come from. The Gilmore resource, so we put this out, 258,000 ounces. These are constrained both open pit and underground resources at an $1,800 gold price. So you can imagine in the current market, you could actually put most of that into reserves where it's been drilled to an indicated level. We think there's some opportunity here to increase the resource in the shallow part of the system. This long section, the strike of the mineralisation actually becomes quite oblique in the northern part of the resource area. We need to do some further drilling in there, and we think we can result in some incremental growth. We also think there's an opportunity for potentially a second lode at depth beneath this structure, and we've been doing some deeper diamond drilling to test that concept in recent weeks. If I move now into our Yandina Project, so the Yandina Project located down in the wheat belt near Lake Grace for people who know Western Australia. This very large land package in joint venture with Cygnus. We're currently taking on the management of the project. Cygnus has been managing this project in the past. What we see is the opportunity here, large-scale regional shear chem corridor, stretch over about 15 kilometres, and the opportunity really is to follow up the air core results that we have, and hopefully we can make a discovery in this part of Australia. If I talk to our capital management strategy, we're well positioned to create growth and returns. We've got a strong liquid balance sheet with strong cash position, and as I indicated, we became debt-free back in July, and we're certainly building our capacity towards about 100 million net cash as I speak. That means we've got the capacity to do mine development or to invest in value accretive opportunities. We've also recently put a dividend policy in place. The essential elements of that policy is a dividend payout ratio of 15 to 30% of free cash flow, and would be made on 2 half-yearly payments, so interim and final dividends, and subject to us retaining $100 million cash balance, which I've indicated we're getting to around that levels at current times. We also have $65 million of franking credits as a consequence of the 50% sale of Gruyere to Gold Road. so we'll be in a position to be able to pay fully franked dividends. It's quite an exceptional position for a company that really only got a mine up and going a little over a year ago to be able to start paying dividends back to shareholders. So to sum up, Gruyere is a strong business underpinned by a low-cost, high-quality gold mine in Gruyere. Not many companies have resources and reserves that confidently go out in excess of a decade. It's a high-margin operation. We've got growth opportunities through our tenement portfolio and at Gruyere, and we've generated strong shareholder returns through capital growth, and then looking into the future, we'll generate shareholder returns through dividends as well. Thank you.
Thank you, Duncan. Now, any questions from the floor, please? No? You've done a great job.
Excellent.
There you go. Thanks very much.